This is Before and After from Refinitiv. I'm your host, Johanna Bota. In today's Before section, we are looking at global tech heavyweights Apple and Facebook, which are reporting last quarter earnings this week. In the After section, we will be examining manufacturing PMI. In this episode, we will once again be turning our eyes to the stock of the largest company in the world, Apple, the investment trade that defies gravity. They have been critiqued for not innovating since Steve Jobs passed away. And yet, what other brand can rival the fierce devotion that surrounds this global tech icon? Apple is expected to report iPhone 11 sales of 66.7 million units at an average price of $781. Combine that with very strong sales of the AirPod and Apple Watch, and you get revenue expectations of $88 billion, as well as an earnings per share of 4.54. Bottom line, it's hard to believe a stock as important and as big as Apple, which had previously thought to have been fully valued, could climb 80% since June. But that's exactly what happened. And now we're looking at a tech giant worth over $1.3 trillion, which makes it the largest U.S. company by market cap. So, with the stock already up 8% this year after last year's 86% return, a slip up in growth would not be taken fondly. And though tech, broadly speaking, is rich at a 22 multiple, Apple is now trading at the highest end of its multiple range. Although this year's 5G iPhone is expected to be a game-changing product, we'll need to see guidance remain intact. After Apple's recent climb from its early June lows, we could potentially see a retracement. The first level of interest would be the 23.6% Fibonacci retracement level, which would put the stock at $283.07. Facebook has received a lot of criticism recently, and the new year seems to show continuation for this trend. Customer information privacy is the issue currently on the agenda, and what comes down the pipe can seriously affect how Facebook makes money. So will that be the end of their reign? Probably not, as commanding eyeballs still matter, and in that regard, Facebook is still near the top of the food chain. Nevertheless, they did spend last year dealing with mounting headline risks on regulations and external pressures. So the table was set for them to fail. Most recently, the social media giant also resisted peer pressure to restrict politically targeted advertising. Others, like Alphabet and Twitter, barred political ads outright. But for Facebook, who depend on ads for 98.5% of their revenue, in 2020 being presidential election year, the opportunity seems to be too enticing to resist. Investors should expect more scrutiny in the aftermath of the election. No doubt the divided electorate will be looking for scapegoats, and Facebook is an easy target. And yet, the networking site continues to see 22% revenue growth and should continue to increase market share, which is remarkable given they have 2.8 billion users worldwide. Often, companies use a negative backdrop to temper expectations, leaving room for over-delivery. Bottom line, the fourth quarter of 2018 saw Facebook's earnings report come in as a big beat on the revenue of $16.9 billion versus the expected $16.39 billion. The next trading day, the stock jumped 10%. But if we look back at the chart, a small beat of 1% on EPS on July 18th led to an 18% sell-off the next day. We know there's no real wisdom in saying a good earnings beat will lead to more buying and a slight beat will lead to a big sell-off. But one thing to gather is where the stock was at the time of both double-digit reactions. The July 18th sell-off came after Facebook was trading at all-time highs, and the large gains we saw in Q1 of last year came after Facebook had sold off hard with the rest of the market at the end of 2018. A 6% post-day move is priced in implied volatility, but perhaps based on the stretched situation of the chart, that's not enough. Facebook is expected to bring in $20.9 billion of revenue for the quarter, compared to $16.9 billion for the same quarter last year. That's 23% revenue growth. Very impressive for a $600 billion market cap company. Keep in mind, though, that the stock since then has rallied over 50%. We saw manufacturing PMI come in weaker than expected at 51.7 versus expectations for 52.5. It seems that even optimism over a trade truce and bid-up stocks hasn't translated to an uptick in manufacturing expectations. In this bullish tape, though, good numbers get celebrated and bad numbers are shrugged off. The equities markets hardly reacted on the number, and Honeywell traded up 0.25 basis points. We will just have to keep watching manufacturing figures, as a broader recovery will not happen without it. There it is, Apple and Facebook in the before, market manufacturing PMI in the after. Refinitiv data throughout. This has been the Tuesday episode of Before and After. Please subscribe and hit the notification bell to ensure that you're alerted to all of Refinitiv's future market updates. We'll see you on Friday.